YouTube, what's going on? Welcome back to another trading video. Actually, it's a trade recap video. My name is Craig, and this is where I document my journey until I become consistently profitable trader. So if you're new to this channel, be sure to leave a like, comment, share, subscribe, and turn on the post notification bell so to get notified the next time I drop. So in today's video, I'm just going to go through the trades I took last week. Today is a Sunday, the 21st of June. Happy Father's Day to all the fathers out there. I'm just going to backtest, just go through the trades that I took last week. I think I took one trade on Wednesday, which was also supported by FOMC news. I'll show you and I'll explain everything, my analysis and what I was thinking when I was taking the trades. So I've recently decided to take less trades and just focus on my A+ setups, and I'm going to give you a little bit of knowledge about my setup and how I look at taking entries and trades using two moving averages, which is the 500 AMA and the 50 SMA. So don't forget to like this video, subscribe, and turn on the post notification bell. Let's just get into the trade recap, and then maybe at the end of the video I'll show you the two accounts that I have with Funded Nest. The 15k account, which is now around break even. It was in drawdown, around 3.5% drawdown. Now we are back at break even, and the 5k account, which is now just about 2% in drawdown. So I'm gonna show you that. I'm gonna show you my Funded Nest dashboard, and then it will be the end of the video. Then I'll see you tomorrow on Monday when I'm analyzing for the week. So let's get it, let's go.
As you know, we only trade Euro USD here, so there's the Euro USD chart. So I'd marked out these highs and these lows. I don't necessarily need to look at that, but in this case I was considering it. So these lows were the lows that I wanted to take on the 11th of June. I wanted these lows to get taken out so that we continue bearish, but then the market did not come and take out these lows. So the market actually pushed higher, even though we were still bearish on the high time frame and still bearish on the 15-minute time frame. So on the 12th of June, I didn't take any trade. It was on a Friday, so I just didn't take any trade, and we were just consolidating, and I just ended the week like that. So this is a trade recap of last week's trading. So last week started on the 15th and ended on the 19th of June. So on Monday, since I was looking to sell this market, on Monday we were above the 50 SMA, so there wasn't any trade I could have taken to sell the market. The trades actually came in New York session, but I only take my entries during London session. And during London session, in this area right here, we were still bullish, and for me to take any bullish trade, I need the market to retrace, then start forming the bullish move to come and take out these highs right here. But that didn't happen, right? So with that, on Monday I didn't take any trade. Then on Tuesday I could have taken a buy entry to take out these highs right here, to take out those highs right there, but I didn't get any good entry on my London session. So I actually take my trades during pre-London, coming into London session. So 9 a.m. UCT +2, UTC +2 until 12 a.m. That's where I look for entries, and then after that I'm just managing my trades and just going with the flow of the market. Right here, market just broke above these highs right here and just went and never came back to fill these favorable gaps down here to then continue. So I didn't get any trade on that day, which was the 16th of June. Then on the 17th of June, that's where it was FOMC. We had FOMC news around 8 p.m. So, and that's when I got my entry for a sell. So right here, as I said, in the bigger view of everything which was going on, I was looking to sell this market, take out this lows right here. So what I look at is I need to see a push, right, a very strong push followed by a retracement, which is a collective retracement, which I like to say it's a curving retracement, where like the market is retracing but not in a straight line, but the market is retracing and actually curving a little bit like this. So that's what I like to see for me to take a continuation trade going downwards. So right here, looking at this on the higher time frame, I was seeing this curving retracement. If we come from down here going up here and coming to the 17th of June. It's a Kevin retracement, and we still haven't broken above these highs right here. So I was still looking to sell the market to take out those lows right there. So that's why when Wednesday came and we actually broke below the 50 SMA just right before London session, I was looking to sell the market. Even looking at this right here, we had our push to the low, right, then retracement curving to the side to then continue bearish move. So this was what I was looking at that time, to then take the sell during London session right here. So the market actually came and broke below this 80-hour average true range line right here and broke down, and then retraced to show some favorite gap to show up there. In this case, it went for this favorite gap right here. In this case, it went for that line, which there was a favorite gap right there, to then tap it right here and then push back down. So once I saw that the market was now pushing back down below the 50 EMA, and we just made a small retracement, that's when I did my entry, then put my stop loss above these highs, just above these highs. It is self distance. I could have put my stop loss just above this high since we had a massive push to the downside, but I just wanted to be safe, and so I did take my entry here and put my stop loss above those highs. Then just waited for the market to give me a good risk reward. The stop loss here was around 11 pips. It was 11.3, around 11.3 pips. I was targeting a 1:4. So I was targeting a 1:4, but then when we didn't even come close to the 1:4 and FOMC news were around 8 p.m. right here, I just removed my stop loss and I removed my take profit. I just removed my take profit and put it down at these lows right here. Then FOMC came and gave us this huge spike right here, this huge spike to the downside, and then around this area right here, that's where I closed my entry for a 5-hour trade, even though I knew that the market was just going to continue bearish since the high time frame, like the 1 hour time frame, had this low to take out. And I just watched it happen, and I was happy with what I had and satisfied with how I'd taken this trade, and that I'd waited on Monday, Tuesday, and Wednesday to then get my perfect entry, my A setup entry. Then the market just played out. On Thursday, I didn't get any trade because I was happy with what had happened on the previous day, and I just didn't want to ruin anything or mess anything up. But if I was to take the entry, this is the retracement I was talking about, like a corrective retracement curving to the side. That's what I like to see. Then just continue bearish. So we had that, and I could have taken this entry right here. So this blue line right here, this faded blue line right there, is my trading session, where my trading session starts. So after that, we broke down these lows right here, then retraced to this favorite gap to give me a sell entry. The stop just above the true range line, left distance 16.5, which means I'll be trading 1:3. And it could have been a beautiful trade to add on to the winning streak of the week. Getting this trade, and when Friday came, I was expecting a reversal day going towards the 500 SMA. So that's just about it for the trade recap, and I'm so happy with the way I am trading currently. I'm so happy with the way my strategy is working. I don't have any much things to say or anything to complain about, but this is just the strategy. It's as simple as that. So I can just go back to any day. Let me just go back to any trade. Okay, this trade right here. Exactly what I was talking about when I was saying I need a push to the downside, a corrective retracement curving to the side, then when my session comes 9 a.m, that's when I wait for a breakdown break below right here, then retrace to a favorable gap right there, and this favorable gap was in line with the 50 SMA. So the market came back here, tapped the favorable gap to the T with a sniper entry, and then stop just above the high or above the, if the ATR line was above the high, I would have put the stop above the ATR line, but the ATR line is below the wick, so I'll put the stop just above the high, like that, targeting a 1:4, and it gets hit like that. So that's how I trade. This is my A setup, and I'll be taking more of these trades. This is a B setup. I won't be taking these setups. This is a reversal setup. I'll be targeting 1:2. Then this is a setup. We get a push. We have a corrective retracement curving to the side. Then we get our nice entry after we take out the Asian low. This low, we take out the Asian low, retrace to a favorable gap right there. I'll just put the line for the favorable gap. Retrace to a favorable gap right there. Take our entry. Look at how much we are risking, 9.3. So we're targeting a 1:4, then the 1:4 gets hit right there before the day even ends, since I'm a day trader. So that's it for today's video. I'll see you in the next one. Actually, I'll see you in the next clip, where I'll be showing you my funded nest accounts, which are now almost in break even.
Okay, bye.